All right, so boom. So I had this whole theory around what was going on during like the pandemic when it comes to investing, because social media allowed a lot of the hype to go into boosting valuations per se, or social valuations for a lot of these IPOs or a lot of these meme stocks that investors got into. I really love what was going on during that time because it got more people involved in, while they were sitting in the house, to invest and grow their wealth. But one of the things that I felt that was very interesting is that the social valuations of some of these companies that went public is showing up to they weren't really performing as well as they wanted to. And now that we're on this apparent bull market of the of stock during a time where the recession is like a faded memory or something that's talked about like urban legend, a lot of people are really trying to figure out what the hell to do with their investing. So in this video, I really just wanted to talk about what we saw initially in the first wave of IPOs during that pandemic, what we're seeing right now when it comes to IPOs starting to pick up. But then also, if you are going to be investing in IPOs, what's some of the things that you should look for? So with this, the purpose of this video is to pretty much just lace together for investors that are just getting into this team and noticing that IPOs are starting to split the block. So the within that pandemic IPO run was legendary, but a lot of those tickers actually saw their value decrease. But the theory around it is that while we're seeing companies such as SheIn or SheIn or Instacart or Stripe or the new ones that I'm going to talk about that just recently IPO'd, I really wanted to bring a kind of a different taste onto people's mouths that may have invested back during when Coinbase went public or when other companies like Snowflake went public, and then they saw that their valuation dropped, in which their share prices dropped due to the fact that they weren't really popping when it came to their financials. Because a lot of investors, maybe not you, but somebody, they'll see the hype around this company, but don't understand the homework or the questions to ask, not only about themselves as investors, but what the heck is going on with this company and why should I invest in it? So within this video, I kind of want to walk through those 3 points of uh, focus per se, but also give insight into what I am anticipating when it comes to the IPO market. What am I anticipating when it comes to investing in general, and how investors need to really focus on what's to come and how to actually maneuver, because what used to be hot is not going to be considered as hot like Paris. That's hot. It's going to look a hell of a lot different. The pandemic did a great reset on a lot of things, especially investing. So I wanted to talk about how this blitz that we're going to be seeing is going to feel and look a little different, and how only those 42, let's just say roughly 42 companies that actually had that actually went public this year, comparison to the ones that we saw, how many, it was a freaking real blitz back during the height of the pandemic. And I wanted to lead off with talking around why did we see a lot of those companies not performing as strongly as they were. The social valuation didn't match the actual valuation down the line. Right at that time, the economy was going through kind of that up, up, up. And a lot of the companies were setting forecasts that we could anticipate to see when it comes to their performance, no matter if it was companies that were around 50 or 100 years or companies that have were anticipating going public. People were forecasting things to be, and that showed up and matched their valuation. And as the valuation actually blew up and it got kind of coincide with the social valuation, people brought into that height and actually brought into the stock. But within that, we are noticing that it's not going to be a recession. Oh, it's going to be a recession. It's kind of like this little situation. You know, I love to do that in some of my videos. But the reason why is because the GDP and other things that historically gave context into the pace of the currency that we're seeing in the economy is having people saying, "Oh, well, the stock market is still doing fine. We're not in a recession. The GDP is saying we're fine. We're not in a recession." But yet and still, like I continuously say, that people are going through their own personal recessions, and things are actually going to look different than what we may have seen in 2008, or to what we might have seen in, let's just say, 2013, or what we might have seen back as far as 1970. What I have said continuously is that the pace of what we see the economy do is not going to be the same as what we've seen, but they're going to have a different face. So within that shifting foot of the 42 that I told you about, the companies that IPO, comparison to what we've seen back in the pandemic, that we really haven't heard too much about these companies, unless if you follow me on any other form of social media. The companies that I have been talking about, they haven't really been talked about, because IPOs are still happening. But the thing is, the matter is that I am going to really be intrigued on how the companies that are stepping out right now to go public, because they need dough. That's why you pull an IPO. Companies need money to survive, and they are not, and they, their current stakeholders need money, so therefore they go public to get the to give shares, to get money, and to keep growing with the money that they get and to survive. That's kind of how IPO works. But anyway, out of the 42 companies that have IPO'd, it hasn't been the same fanfare that we saw during the height of the pandemics in their IPOs, because the economy, like I stated previously, looks a hell of a lot different. So let's just talk about a couple of them, and then I want to go over into what the companies that I am anticipating to go public this year, and then some questions, or not questions, to ask yourself as an investor and ask your portfolio as we go into this IPO blitz market. It's going to look different. So I'm going to probably butcher this name. It's Kenvue. The ticker was KVUE, and they're kind of like a spin off of Johnson and Johnson. Which, interestingly enough, their company actually split their line of businesses, split it. So that's interesting. I talked about that over on public, but anyway, this is back to focus. But Kenvue, you're probably very knowledgeable of the brands that they actually produce. Which the first one is like Tylenol, Neutrogena. But during their IPO, they had a very strong IPO, within the pharmaceutical space, period, in general. They raised roughly $3.8 billion by itself during that IPO. So remember what I was saying, that if you need dough, you pull IPO. So just the same way that a company can raise money during crowdfunding, an IPO is kind of a sense like a way for them to raise money. Their valuation shows you what they're basing their company to be worth, and then they kind of give this figure, which is going to look different by the underwriting company who's doing it, and then the figure in which they want to raise based upon that actual valuation. So Kenvue raised $3.8 billion, which is actually good. Another one, though, that I was intrigued is about CAVA. All the girls, everyone loves CAVA. I do, I do, I do. CAVA is kind of like a Chipotle version that goes Mediterranean in a sense. Their IPO, which was not too long ago, interestingly enough, a lot of people haven't talked about how CAVA actually acquired Zoe's Kitchen. If you're in the South, East, you know about Zoe's, you love Zoe's. But Zoe's, and you not only noticed that Zoe's went away and Kava popped up. That's why. And the thing though around it is that I was very intrigued to see how their IPO was going to do comparison to what Sweet Green did last year, if I'm not mistaken, which they did Sweet Green did well. But due to the fact that Kava is kind of seen as the Chipotle of Mediterranean, the fact of the matter is that a lot of people didn't, they talked about, the consumer base of it, but they didn't talk about the currency base of that company. While the company has been doing well with consumers and growing, and I love to say consume what you consume. So if you eat kava, buy kava. That's what people love to say now. I wonder where they got that from. But the other part of the consume what you consume is to research how these companies do in the finances, in the revenue, in the net loss, in the net share of it all. Because yes, you could say, "Oh, kava is amazing, it's good," but how does that palate taste when it going down to the finances? It's a lot of the things that investors are really learning that lesson hard right now. The thing that I'm going to call out as far as the financials, how they did during the IPO, they had a target of $19 to $22. And by the end of that trading day of the initial IPO, they had $43.78, which added to they're kind of the balance of them to be $4.8 billion within their market share, which is amazing. But the thing a lot of people didn't talk about within their with tizzling around their IPO was the fact that Kava hasn't really been profitable. The reason why is because they had to acquire a company, they had to actually expand and things of that nature. And Kava, more than likely, needed this IPO to add back into the cash flow to grow the company the way that they want to so eventually they can make money or be seen as profitable in a sense. You know what I'm going. The reason why I am talking about this side of IPOs is because think back to who was that Rivian. I saw a Rivian truck yesterday. I was like, ooh. The reason why I'm bringing it up because a lot of people were had the hypeism around Rivian whenever they initially IPO'd and the stock popped. But now if you go look at Rivian, the stock is looking like what the hell? But the thing that I added to that conversation about around the IPO for Rivian is that people have to look at companies, not necessarily if you're going to do IPO. Yes, it could pop. Yes, it could not. But if you're going to, what is the pocket that you're going to invest in with these companies? Is it going to be for just now to see if I can get a pop, or is it going to be for long term? Because if you're not privy, that Rivian actually at that time had not turned a profit. And that was one of the things that I want people to keep in mind is that oftentimes a lot of these companies have been performing well, they've raised money, but yet still the profitability or the finances of a sort is one that is not really talked about. And that's the thing that I want people to keep in mind is that if you're just going for the pop, you need to understand how the paper is going to be handling is coming in with this IPO and how is it doing before they did the IPO. And then how are they going to actually take that money from the IPO and actually make it grow? And that was one of the things that I wish Rivian would have done. And that's one of the things that I wish Kava would have done is to say, hey, they're not going to do that because they want you to buy it. But it's to give that outline into their roadshow, which the roadshow is pretty much where they go around and shop around. Say, hey, we're going to have IPO. We want you to invest in it. Okay, whatever. But the thing around it is that if you would have been privy, it may have been a good company for you to invest in, but it all goes back into your risk tolerance, your goals, and how long you plan to hold after this IPO. So that's one of the things that I wish people would be knowledgeable about is that you'll invest in this company. A couple of weeks later, you're like, well, what the hell happened to this company that I invested in? It's not being the same price. What happened, Nadia? I usually get DMs like that. It's because if you are investing in a company, I'm not mad if you do because who was that did well? Snowflake. But right now, Snowflake is actually a little bit pivoting more so into AI. We'll talk about that later. I think I did talk about it in the video. But the fact of the matter is that the hypeism around social media and investing has driven the social valuation up without people understanding the valuation of companies that are coming to the market. Pretty much this of it because the whole notion around consume what you consume. Oh, buy companies that you know, but no one really tells you is the fact that you have to research those companies before you buy them. It's just smart to do it that way. So while I have said that whole mouthful, I do want to give some insight into what's some of the IPOs that we could potentially see this year going into 2024 and beyond because some of these companies, interestingly enough, they were slated to go public while the time the market was the hot, like it was like a new Jordan every day, it was a new IPO every day. And then the forecast for not only those companies that IPO, but other companies that you might have known started to the forecasting when the math wasn't mathing like they said it was this was going to happen, it was going to rain, but yet the drought has gotten worse and they had to lay off as with the reason why we notice a lot of companies push back or halt their IPO. They filed their S1 and then you never heard from them, son. But the reason why I want to talk about some of these companies, I'm not going to run through them. I'll probably just give a highlight of some. Is that the IPO market or the blitz that we saw then, the blitz is going to look different because a lot of companies aren't really checking for doing them right now. They're testing the waters. We're putting out articles and such. But here are some of the companies that I do see in the next couple of months to a year-ish could be going public. The first one is Fanatics. Everybody knows what Fanatics is. This company has really been growing over time and actually pivoting. So that's one of the companies that I really see growing. ARM, arm, not your arm, but ARM. This company, Turo. If you have been thinking what's the Airbnb for cars, it is Turo. Interestingly enough, right now, what's interesting is that Uber is trying to almost duplicate what Turo is doing. Um, and I'm intrigued by it. A lot of people have been utilizing to build their Airbnb like empires within the Turo space. We're seeing videos on TikTok, we're seeing videos on IG, and people just really getting into it, and I love it. But I also hope that they actually look into this IPO whenever it's time to go, which I am anticipating to be this year, is not early 2024. Stripe is another company. You probably know what Stripe is if you are processing payments. Okay. The next one is Instacart. Yes. Instacart, interestingly enough, when I'm seeing, looking at the evaluation, it's kind of giving me remnants of what we saw with DoorDash and such. And I'm not going to be pushing apples to oranges, but I'm just pushing the cart that this company more than likely is going to be going public in the near future. Another company in which I want to talk about has been in the socials for some not good is SheIn or SheIn. It depends on who the hell you ask. Side eye. SheIn, I talked about them initially, probably roughly what 2021 ish. They have been pushing around going public, and the latest influencer event that they had was kind of them to get a different face to the company because like I felt I called out in 2021, they wanted to go public. But you notice around that timeline is that when a lot of people start giving us not so good reviews around Shein as a company, not necessarily in the clothes and such. But yeah. So the fact that they had that actual campaign to happen and the flag that's been coming around it, I initially think that they might push it back, but they might just go public due to the fact of the people talking. And that's just some of the companies. If it's any more after whenever I'm recording this, I'll put them here. That you should research. So if a company needs dough, they pull IPO. So what should you know? Get it? IPO. Here are some questions though. While I myself personally as an investor, I very rarely but sparingly invest in IPOs. I wanted to give some context into those that do want to invest in it. I'm not opposed to it. I never judge. I just give insight on the journey that you may have with your money. You might want to you for those that invest in IPOs, they want to get on the second floor, not the ground floor. The ground floor for those that are the major companies, the institutions, the angel investors, those that have either even invest in crowdfunding, which I have. Interestingly enough, I have a company that I'm waiting to see if they go public. We'll have it probably in the next 3 years or so, or they get brought out. But you could say the ground floor looks a little bit different within the IPO stage because there's some people that got in buying shares of the company or investing in the company. Is technically buying shares is you investing in the company in a sense, and you becoming a business owner in a sense. Oh yeah. Anyway, but you want to get on the ground floor, and here's some things I want you to keep in mind. The first one is how, like I called out, how does the company itself cash and carry? What's the financials? How had they been performing before the IPO? So within the S1 and all the documentations when a company goes public, they have to show their hand of how they've been handling the cash, the revenue, the expenses, and things of that nature. And then one of the things I also would tell you, I don't know if I didn't put it there, is that how has the company been, how is the leadership? Yeah, I do have that. The leadership, who's on the board, certain things that they're doing within the company. That is something that I really want you to understand. It's not only the hype ism around it, but the homework. It's like how much cash do they have? How are they spending their money? How do they make their money? What's the lines of revenue? What's the net loss and things of that nature? The second thing is how can they actually take this money from the IPO and pivot to be more profitable? That is something that is not really talked about, is that when a company goes public, how they're going to actually probably utilize this to grow and expand, of course, be profitable. You have to have an idea. While they might not tell you off bat, if you know, do a SWOT analysis of a company before you invest in it. I know some people don't want to do all that, but if you do just a quick glance, and you can kind of see the potholes that the company has and how this IPO could fuel them for the growth long term. Third thing, I don't know, you see my hand. Third thing is who are they competitors, and how they gonna fit within it. Like my old CMO at the Met came from Amex, and he used to talk about the fast follower. Granted, you will not have this might not be the Amazon, but is it potential to be a fast follower within that market share? How does that fit? They say, for instance, they might not be Usain Bolt, but who's going to be close second to Usain Bolt running this sprint? That's how you have to think about it. Is that how do they fit? Not only how do they fit now, but how do they fit 5 and 10 years down the line? Because evaluations is what their expectations of their how the value of their company will be 10x down the line. So when you look at the competitive landscape, who is in there, and how is this company actually going to fit? The fourth and last thing, I'm not gonna give you everything, but just a couple of things, is that who runs the company? I already talked about the leadership. Who runs the company? And who was an early funder? This is a little twist to it. The reason why I'm bringing up leadership and who runs the company and the intricate parts is because we saw what happened with who was that? WeWork. That's why the leadership oftentimes is, yes, they're not the neck, they're the head. The neck oftentimes is those who are on the board, those who have a lot of stake in the company. That's who the neck is. But the leadership is the CEO C suite is the head. So how they actually, if they were to go off track, that could actually impact the neck and the rest of the body, if that makes sense. We saw again, we work in other companies that their CEO was the no-go, and it impacted not only their IPO, but also the share price and the sentiment of a sense of that company down the line. I do believe that IPOs will continue to slowly come back into the headlines, but as you see, it was 42 companies that went public so far as of May this year, and no one really has talked about but a couple. So there'll be more into the headlines if we go through next year. But I want you to keep in mind that sometimes, again, that roughly 2 weeks after that, to a quarter, that actually after the IPO, that you can at least see that decline happen. And one of the things I wanted to tell you is that if you are investing in a company that goes public, always look at the first quarter earnings. If you're going to hold it, at least hold it to the first quarter earnings after the IPO. Why? Why is because you're going to fully understand and be able to compare how the company was performing before the IPO and actually what is being seen after that IPO as far as performance from the cash to carry, the different moves that they made. So that was the thing I wanted to include, is always watch the earnings. The first one or two earnings after the IPO, to have like a baseline of seeing how they grown over that time. But the thing though is knowing your risk tolerance, your goals, and positioning could give you gains if you are investing in IPOs. So one of the things I do want to call out is that you're noticing a company doing well within an IPO, and you're like, dang, I missed it. Look into leveraging ETFs. If you know me, you know I was getting ready to throw that curveball. Don't just necessarily think that you just have to invest in companies right when they IPO. You can put it to your watch list, see how it's performing, wait till those 1 and 2 earnings after, and then see if any fund is going to actually add them into their ETFs. This is a good way to protect your risk and you protect your neck, but also get in on owning a partial of that company. I mean, you could do a fraction of share too. That was something that I mentioned on a public post when IPOs was hot. That if you don't want to invest all that money, invest a fraction of share, see how the company performs, and then either pull out or move your money around. But when it comes to ETFs, eventually down the line, these funders or hedgies is going to pick and add a percentage over into ETF that has been performing well. So that's another thing to keep in mind. So while I do see that the IPO blitz is going to look different versus the pandemic, this is still a good time for you to invest. While the stock market is not really shitty, it's still going to go and scale differently. So understand who's the companies that you're investing in, understand how they fit within your portfolio, and how they can fit into your gains over time. So give me a follow, ask any questions in the comment section below, and go grab an IPO. I guess I don't invest in IPOs, but maybe you want to. That's it.